Hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. So, what we're going to do is talk about the economic data, see how that impacts the overall markets, talk about the geopolitical environment, especially right now, and then round it up with some option strategies we could implement into our portfolio. All right. Let's talk about what's going on this weekend. I said, hey, heading into the weekend, we probably wouldn't see a lot of buying pressure. Well, that was a little bit off. We did see some buying pressure into the close on Friday, giving us a bit of a follow through from the previous day, right? Well, something that we are noting right now is that the follow through really is going to be something that we're going to have to keep an eye on today. I think it was mostly off of lack of volume that we saw our rally happening on Friday. That's really what that was about. We saw crude oil touch up against that $100 a barrel last week. I think we might revisit that again this week. We're seeing some weakness though as of right now. A lot of this is going to have to do with the geopolitical tensions we've got going on between Russia and the Ukraine. Something to note as of this morning, we've got China backing Russia, really kind of trying to show a bit of neutrality while at the same time saying they don't really like what the US is doing. So really showing some backing to Russia and trying to stay neutral at the same time. What I really see this as happening is trying to stay in the shadows, if you will, while Russia really makes the headlines on this Russian-Ukraine border. They even elevated their nuclear status in Russia, so to a defensive type of rating. So just elevating that level is really starting to add some tensions globally. That being said, China's trying to stay in the shadows, like I said, and waiting to enter what looks to be Taiwan and take over there. So really seeing how everybody reacts to Russia before China really does anything, I think. So without further ado, let's get on with the overall charts here and see how the markets are treating us today. We can see here that we've got crude oil making some moves here. It is in positive territory outside of that $100 a barrel mark, but I don't think that we have seen the last of that there. Now, gold should be making some moves here with talking about tensions in Russia, folks worrying about the stock market rolling out of tech into some names that will probably hold some value. Gold is going to be one of those names, folks. People are going to be flying to the precious metals and putting their money to work there. We can see that we've got this trend channel that's going to act as support now, folks, as we start moving up along here. And of course, this mark here of 1923.7, that is the previous high, all-time high. Now, we've obviously broken that here recently and are continuing to break through that, but folks will still act as a resistance going forward there. So crude oil and oil, I would say, are risk to the upside as of right now. As a matter of fact, I would even go as far as to say Bitcoin has risk to the upside, because I think that folks will start putting money to work here as well if we start really seeing some corrections here. That said, right now we've got the Dow Jones Industrial Average making a huge move to the upside on Friday, like we were talking about, but today making a bit more of a correction. Now, the move to the upside on Friday really felt like it was just lack of volume. There was some volume behind it, though. We can see as our volume bars are really spiking there, it just felt like there was not a whole lot of bearish selling behind that. So it was just a buyer's vacuum to the upside here in most of the markets, which I did expect to see a little bit more of a push here in some of the other equities along with the Dow Jones. That's the only way we're really going to see this strength in the equities continue to move forward, is if we get some of these tech sector like the NASDAQ really starting to make those moves to the upside as well, which we aren't really seeing that strength behind those markets right now. E-mini S&Ps, I want to go to the breakdown here of the E-mini S&Ps. We can see we've gapped down, and a lot of this has to do with folks not really trusting what was going to happen going into the weekend and overnight on Sunday. Really a lot of the same here is that we're still in this circle where it seems like they're trying to have some talks, but then again, on the backside of it, we see these elevations in the nuclear status for Russia on the defensive type of warning, if you will. So a lot of tension still going on. I think that the risk for equities is still to the downside, despite the fact that we saw that nice turnaround from Thursday to Friday and the Friday confirmation. I would still be a little leery going into this week, wanting to jump in both feet with buying equities. So still would be looking to do covered calls, things like that, where we're lowering over a basis in our portfolio right now because we've got this high volatility. We don't have a whole lot of market momentum to the upside. So at that kind of juncture, we can get really far away from where the underlying is currently trading and sell those covered calls to lower that overall cost basis. So check out our webinars we're doing right now on cracking the code to trading options. We'll show you streamlined ways to look at options and understand the pricing mechanisms that's behind that. And that will really change the way that you look at trading options. All right. So that's all I got for you. Check us out on Thursdays. Make sure you guys hit the like and subscribe button right there so you guys get notifications when we pop in unannounced. All right. So if you can't take that, take it easy.